Joining me now is Steven Ehrlich, Director of Research for Digital Assets. Steven, thanks for coming on.
Yeah, thanks, Brittany.
I'm excited to talk with you about your latest newsletter with the theme of It's Getting Late Early. And in it you write, quote, "One thing is becoming clearer, crypto's leash is getting shorter." Can you explain what you mean by that?
Right. What I meant when I wrote that is essentially that uh, we are coming to a point now where crypto is getting so big and it's starting to bleed over into the broader financial world that something is going to have to come to a head. There are many different types of bills floating around Congress right now that seek to address like real existential questions about crypto, such as whether or not it's a security or a commodity or some other type of asset. The SEC is going after major players in the crypto industry, the Coinbases and Krakens of the world. And the SEC is going after some of the major players in the industry, such as Coinbase, who had recently issued a Wells notice signifying a likely enforcement action. It's reached a major settlement with Kraken to force it to shut down its staking service for U.S. customers. The CFTC recently launched a complaint against Binance, alleging that the company has been selling billions in unregistered derivative products to U.S. customers. And so all of these three forces are sort of coming to a loggerhead where something's going to have to change, because we can't have the industry continuing to develop like it is. Congress trying to pass different pieces of legislation, some of which focus on trying to determine whether or not crypto is a commodity, a security, or some other type of asset. Stablecoin legislation, which really goes after a particular type of digital asset whose value is pegged to that of an underlying piece of collateral, usually the US dollar, but can have calamitous consequences if things go wrong. And then again, these enforcement, or excuse me, regulation by enforcement actions that don't provide the forward-looking guidance that even the well-intentioned members of the crypto industry are looking to have, so that they know the rules to abide by. So basically, when I wrote "It's Getting Late Early," paraphrasing Yogi Berra, the former Yankees catcher, essentially the point I was trying to get across is that although looking, for instance, at the how long it took for the internet to develop, which really took decades, not years, months, or days. We're still, I guess, in the middle of the second decade of crypto's development. But at the same time, because of all these different forces and just the widespread notoriety that crypto has created for itself, it's high time to find some way to break this logjam.
From what you're saying, it sounds like we're at a bit of a crossroads here, and you're saying
Mhm.
something is going to have to change. Is this actually potentially a good thing for both the industry and the everyday investor?
Potentially, absolutely. I think everybody wants to find a way to settle these different debates and kind of move past this crossroads, as you said it, so that again, well-intentioned, well-meaning companies know the rules that they have to adhere to. Customers that use these products and services and want to buy digital assets, either to use the functions that they provide or to invest, know that they have the right protections in place and that they're going to get appropriate disclosures so that they understand the risks associated with buying those different types of assets and getting involved. So yeah, that is all of that would be welcome. The real question just comes down to, how do you thread that line between fostering and promoting innovation while keeping a leash on this industry so that it can't run amok and create issues like we saw last year with the collapse of FTX and several other high profile companies. It would be great to have one law to rule them all, similar to, I guess, what the European Union recently passed with its markets and crypto assets legislation that overwhelmingly was carried forward by, I think, 92% of European parliamentarians who voted on it. But then we're going to get down to the brass tacks and trying to figure out how to move past some of these logjams that have hindered previous legislation in the past. But nobody disputes the fact that we need regulatory clarity.
In your newsletter, you actually quote a member of the European People's Party, and they said this: "The European crypto asset industry has regulatory clarity that does not exist in countries like the US." First, from your perspective, based on what you just said, it sounds like you believe that's true. And second, what can the US learn from the EU in terms of crypto regulations?
Right. So that's a good point. And the EU was certainly ahead of the US at this point because they were able to pass this gargantuan piece of legislation that's going to cover everything from I wouldn't call it minute, but more esoteric issues such as stablecoins to broader rules and regulations for how companies in the virtual asset space need to register with national authorities and sort of maintain adherence to EU rules. Of course, there's still going to be some nuances that need to be worked out, much like how, for instance, uh, regulatory authorities in the U.S., like the IRS or SEC, have to turn laws into actual regulations that companies under their jurisdiction or remit have to follow. A similar process happens in the EU, where once a piece of legislation moves out of the legislative bodies, then it goes to the European Securities and Markets Authority and a couple of other bodies to get that turned into more concrete regulations that still have to be translated into national laws, which aren't always necessarily uniform across the entire Eurozone. So there's still some nuance that needs to happen, but at a very high level, there are clear rules and laws and rules of the road so that companies that want to do business in the EU know that at this point now, all that they need to do is register with one of the 28 member countries, and then they're going to get passporting rights throughout the rest of the Eurozone, where essentially they're going to have to adhere to the same types of requirements. So that stability is something that is very welcome. And right now it's not something that we have in the United States.